What's going on, everybody? Michael Silva here. 11 sectors in the S&P 500 were all finished in the red. Everything was in the red from an index perspective too, but we're going to be keeping an eye out for a bounce to potentially take place. If you haven't done so already, make sure to hit that thumbs up. It's greatly appreciated if you like technical analysis, intermarket analysis. Going into tomorrow's trading session, we don't got too much data. We do got building permits, which is considered, I guess, a major event. These are all coming out 1 hour. These ones right here, including housing starts. It's coming 1 hour before the trading session starts. So look to see a potential little bit of volatility here depending on what comes out there with building permits. If we take a look at the dollar hasn't been moving much. It's still within this wedging pattern. So if this starts breaking out, I think that we can still potentially see some more weakness in the S&P 500 overall. But we did see now following through on Friday's weak price action, this week started off with some weak price action too. Now tomorrow's Tuesday. There's a thing on Wall Street known as Turnaround Tuesday. Will we potentially get a bounce? We'll look into the smaller time frames momentarily. As you can see, we're heading more down towards that lower weekly expected move, right at around 37.50. Came fairly close, around 50 handles off of it. But, the sell side continues just on this current trend of a series of lower highs and lower lows. If we take a look at the Bookmap software earlier in the trading session, now if you don't know what this is and it looks crazy, that's okay. Think of it, it is basically level 2s painted on the screen. It allows you to see high liquidity. This is what I use when I day trade. So when I'm looking intraday, I like to pull up these charts because it gives you an idea of where orders are hiding out. And if you're just looking at a candlestick chart like this, right, just candlesticks, you don't know where the orders are hiding. So to take the blindfold off and see what people don't see, this is great software to do so. Now we had some orders of high liquidity on ES starting the day right over here, and you can see as soon as this order got pulled, we had this continue to kind of hold up. And when this got pulled, price kind of just continued to go sideways. And then we started to come into this high level of liquidity and started filling into this area. This was the level I was watching for potential bounce. And as we bounced up, this was another next level, 38.50. Now going into tomorrow, I think 3,800 is a higher level of liquidity to continue to keep an eye on if we get some more sell side. This is also, these change, right? If they remove the orders from the book, but if this starts coming down to 3,800, that'd be a level to keep an eye on from the perspective from beneath us. As far as above us goes, 38.70, and then above that we do have some areas of higher liquidity at 38.85. So we'll see here if that changes tomorrow. I typically update this into my Discord, but let's go into the 15-minute time frame so I can show you what it is that I'm looking at. You can see price made this big expansionary type move, and now price action is coiling up, getting tighter, right? Expansion leads to contraction, contraction leads to expansion. Now this is known as a falling wedge. Falling wedges are typically bullish where you get some sort of bounce, but understand that it is in bearish context. We broke down from this large overhead supply area right here. We came crashing down. And now you can see that we're contracting back up again. From a positive note, we do have bullish divergences forming. So what does this mean? Okay, when you see a low and then a higher low right here on the RSI, and you see the same thing right here, a low to a higher low on the price momentum oscillator, and then you see price right here is putting in lower lows, you can see right here, okay? Now, what this is telling me is, hey, yeah, price is going down lower. However, the internals are strengthening. So it's saying, yeah, even though price is going lower, the internals aren't supporting that. And that right there is known as a divergence. And it's a positive one here when you see price going lower, but the internals going stronger. So you have a bullish price pattern known as the falling wedge. You have bullish divergences forming. This looks like it sets up for a potential bounce. It doesn't mean that we can't head lower and still hold a divergence, and that'd be something that we can potentially watch for too. Like I said on yesterday's market brief, I would like to see price to come lower and then start to look to go long. I started scaling into some longs already, and I got out of most of my shorts because, well, this was a crazy big run and I want to take profits and be tactical in this environment. If price starts flying back up to the upside, I'm still watching up here as a potential area to re-short, right? There's a lot of trapped overhead supply potentially here that if price were to come way up back up here on something, there could be a lot of previous sellers hanging out here saying, hey, price is back to break even. I'm just going to cut my loss right there. or break out even. Now that was the SPY. Take a look at Qs. Also positive divergence in the RSI, positive divergence on the PMO, and you have the falling wedge pattern here too as well. So price action is getting very tight. and it looks like we can very well expand from that. Now, whether that's to the upside or to the downside, it's yet to be seen. But if you were to play this from a bullish perspective and you played the breakout, you have your risk tight. You have a little bit of risk, or maybe if you want to get even underneath the weekly expected move and see if it can bounce into next week, that's also a possibility too. But these type of moves, they allow for good risk to reward trading, right? You're not going to break the bank if you just, lose from, moving down to here, getting back beneath the weekly expected move, unless you over leverage yourself. So as price started breaking down further, this looks like it could potentially start to see some bounce at some point. IWM is in the same situation, positive divergence, falling wedge pattern here too as well, right? Strong move to the downside. Now price is getting all coiled up again. We've seen these type of patterns before, like, right here, bam, we saw a big pow to the upside. And we saw it right here, right? Big, strong falling wedge, boom, pow to the upside. We did the same thing here in the SPY where we had the falling wedge, boom, to the upside. We had this falling wedge, boom to the upside. But the thing is a lot of these moves, unfortunately, they came after hours trading session, so it was hard to catch it. And if you caught it here, you were chasing, right? Who's to say that it would continue to make that type of run and then came back down and so forth. So that's what I'm seeing in the overall markets. If we pair that with a couple of indicators, we'll look at the zones right now. This is what I share with the Discord. As you can see here, the zones I like to look at these type of products right over here, where it gives me a good idea is, where price is, what's getting overextended, what's, oversold, overbought. And really you can think of it as Bollinger Bands. You have a low portion of the band, you have the high portion, you have the closing price in the mid, right? So it's just basically telling us, hey, what's the percent upside to the upper zone and then the downside to the lower end. And then right here, the range, I like to just color coordinate this because this will tell you, hey, if it's really green, it's getting to the lower end, right? So it's coming to the low end of the zone. And if it's turning red, it's coming to the higher end of the zone. And as you can see, the only thing red on the screen is SQQQs, which is inverse Q. So if you look at TQQQs or just QQQ, right, that's green, right? Boom, green, because it's just the opposite. Now, what do I see going on here? One thing I want to call out, HYG is, at the lower end of its zone there, 74.02, and we had a closing print at 74.22. A lot of the zones here are falling rapidly, the lower end. So if you just compare this to yesterday's video, you can see that the price of the zones have been falling dramatically, which tells us, a story of price right now. It's kind of crashing down, and we've been seeing that in price. However, even though things are still getting oversold, and oversold can produce bounces. If we take a look actually at the HYG, which is smart money versus the dumb money down here, I like to look for divergences that form, right? So if you have dumb money put in a lower low where the smart money is saying, hey, no, we're actually going higher, you can typically sometimes get rallies. And we saw that. The vice versa is true, right? Where if you have smart money putting in a lower high and then you have dumb money putting in a higher high, so it's going higher, but the smart money's like, nah, we're gonna take a back seat, and then boom, it fell to the downside. Well, now we're starting to get a pretty large divergence here. It's been building. We can see we have on the dumb money, we have a low to a lower low. We're on these quote unquote smart money HYG, we have a higher low, or the bonds, right? And you can see it's also pulling into a prior area trend line of prior areas of support where we saw bounces from these levels. So if HYG, is wedging right here too, boom, and we start bouncing from this level, it holds, it could be giving us an indication saying, oh, okay, well, SPY put in the lower low, it's scaring a lot of people, it could be flushing out people, which we anticipated in yesterday's video, and now we might get a bounce, and then this might bounce potentially too, coming out of that wedge. Now, how far can it go? You got to be aware that we're still in a downward structure, right? Over on the daily time frame, we're still putting in lower highs, lower lows, but it was just an extended move to the downside. So yeah, to see some sort of a bounce or play intraday is something that I'm looking for. So if we bounce, yeah, I'd be looking at right around 386 maybe. That would be a potential good target where we had prior area of support, boom, and then when we cracked down, we basically gapped down through it. We came back up, tried to test it, and we started heading lower. So that'd be an area that I'd be kind of keeping an eye on. But like I said, when I'm trading intraday, I'm keeping an eye on the Bookmap levels just to give me a good idea as to where price may pull to, because these high levels of liquidity can act like magnets. Now, let's go ahead and pair this out the BP charts. We'll just really quickly focus in on this. They are getting overextended to the downside, 27.97 on the RSI there for BP SPX. BP NDX, it still has a little room to go lower, 31.62. Like I said in yesterday's video, it looks like it will reach that in the next day or so. And then you have the BP tech sector, which is BP INFO. This is moving into that oversold condition at 26.45. So you might be able to see a potential bounce in some tech names, right? Apple, I highlighted out a demand area in Apple. I showed also Tesla. Those were down on the day, and that was kind of what I was looking for. I was looking for a move lower and potentially now looking for that bounce out of that demand zone. So we'll see if that's a possibility, but I like the risk reward from the long perspective now versus shorting into the hole after seeing already a strong move to the downside. BPNYA, so the New York Stock Exchange, 29.86, that moved into oversold condition. And then we still have the BPCOMPQ. This is a large one, the NASDAQ composite, still pretty far off there too as well. So it could suggest that we have more downside here and then pay close attention when we start getting to the oversold conditions. That's all I got for you on today's show, everybody. Hope it gave you some insight as to what it is that I'm looking for going into tomorrow's trading session. See you later.